Good afternoon. We're getting right down to business here now, doing it live and doing more at 4 every weekday afternoon right here on 790 KBC, live on the air, streaming live online worldwide at KBC.com. And you're on demand, Mottek On Money podcast, KBC.com, Apple, iTunes, YouTube, all your favorite podcast platforms. Well, a well-fed sell-off today for stocks. Stocks having their worst day in about a week today, with the Dow closing down by just about 700 points after Fed Chairman Jerome Powell pointed to the possibility of detrimental impacts on the economy and inflation because of tariffs. The Fed chairman said the Fed faces a challenging scenario now, rising inflation amid labor market weakening, and the Fed can wait for greater clarity before making any adjustments to short-term interest rates. The Fed chairman Jerome Powell today giving a speech today in a conversation in Chicago, basically saying that to get the economy back on track, he said there's probably going to be difficult trade-offs. Now, that's some of the comments he made. Any measures you could take to help the economy could be inflationary, which might lead to a lasting unstable market, according to some analysts. We'll be taking a closer look at this coming up here shortly. The Dow coming in for a closing loss of 700 points. The S&P 500 down 121, and the NASDAQ closing down more than 500. The worst day for all three averages, well, in about a week. The Fed could face a challenging scenario of rising inflation at the same time the labor market is weakening. According to the Fed chairman, Congress has given the Fed two goals: stable inflation and low unemployment. Those are the two things they focus on. But since 2021, the Fed has only faced one of those concerns. That was higher inflation, as the job market has been solid. The Fed chairman today making clear that the Fed is not preparing to intervene in the financial markets, even if stocks slide and uncertainty mounts. Markets, he said, are just fine. The Fed chairman speaking today in a conversation in Chicago acknowledged that a recent tariff-induced volatility has tightened financial conditions, but he rejects the idea that falling equity prices and rising bond yields alone could prompt a policy response from the Federal Reserve, i.e., a move on interest rates. The Fed chairman's remarks today painting a picture of a Fed on hold in terms of interest rate cuts or other changes to monetary policy. Elevated uncertainty for businesses, especially small businesses these days, is a big issue. I'll talk about that with JOSSELIN Castillo, the principal of federal government relations at the National Federation of Independent Business. He'll be joining me live later this hour, and it's a nervous time in many businesses these days due to the uncertainty, that word we've been hearing a lot lately, especially in the car business. We'll get an update on all that from Lauren Fix, editor-in-chief of Car Coach, and the co-host of the Total Car Score podcast, who's at the New York Auto Show. She'll be joining us live from New York coming up here later this hour. The price of gold in all this shooting higher, hitting a record high, and right now just shy of $3,400 an ounce. Yep, you heard me. An ounce of gold just shy of $3,400 an ounce. Now in your money, the markets, the economy, and the whole works now. Joining us live, Jonathan HOENIG, Fox News contributor, portfolio manager at Capitalist Big Hedge Fund, and author of the book Price is Primary: How to Profit with Any Asset in Any Market at Any Time. Jonathan HOENIG, thank you very much for joining us live here this afternoon.
Well, Frank, it's great to be with you, but I have to tell you I've got a few more gray hairs on my head than the last time we talked. This is some of the biggest volatility we've seen in the 20th or 21st century. I mean, you have to go back to 1987 or 2008, and so much of it, in my belief, is, as you said, tariff-induced. That's all that anyone on Wall Street is talking about right now, and that's really what's moving stocks.
On the live with Jonathan HOENIG, and let's not forget the pandemic days when we saw those 1,000-plus point moves on a daily basis, both up and down. And so thanks for stepping up to the plate here on a day we've seen the Dow move lower, off its worst level, by the way, down 700 at the closing bell. Tech names very volatile these days, with the NASDAQ down more than 500, the S&P 500 down 121. What was your biggest takeaway from the Fed chairman's comments? As he was talking, I was thinking, my goodness, there's going to be quite a market reaction today with his comments on tariffs and inflation and the Fed's potential intervention with moves that might affect the market and so forth. So there were some good questions raised during that back and forth today.
Well, the term everyone keeps repeating, Frank, and not just the Fed, but Jamie Dimon over at J.P. Morgan and any other business leader, is uncertainty. And it's uncertainty caused by, in my opinion, a president who wakes up with one idea and throws it out there and walks it back a couple of days later after promising he's not going to walk it back. So, you really have to have a short-term time horizon. I'm trying to get a sense of the technical strength of the market, and today you saw 200 new 52-week lows, only about 60 new 52-week highs, and the big movers in the market now, it's not those tech stocks, it's gold, as you mentioned. I mean, the 52 high week list is littered with gold names, so that's where I would be looking. I think that's where the smart money is going now, not towards a lot of the tech names, which just take a look at NVIDIA today to know how those Mag 7 are right now.
That is a very good point, and one of the points the Fed chairman made when he was asked the question, that a lot of companies are wondering if they do bring manufacturing back here, maybe policy will change again under the next president. So people are thinking what they should do at this point. So the multinational companies, especially vulnerable right now. We have seen the dollar slip overseas, which is normally a positive thing for the big multinational companies, because when the dollar slips, that makes our stuff less expensive overseas. But now with tariffs, that could change the equation. So we've seen quite a market reaction to these latest comments.
But I think the way to take advantage of it, Frank, is frankly to buy non-dollar denominated assets. When it comes to your portfolio, I think Buy American is un-American. In fact, so many of the foreign stocks are outperforming U.S. stocks by wide margins this year. One name I like, for example, is RWX. This is an ETF that holds international real estate investment trusts. So it's not only a real estate play, but you've got the currency benefit as well if the dollar keeps declining. I think it's why you're seeing gold go up. It's why I like platinum here very much, PPLT. I think a lot of those traditional weak dollar plays are going to be a place to hide out, even if names like Microsoft and the Tesla continue to decline.
All right, let's talk about gold for just a moment here. Quite a move on the upside here, 3,365 and change at last check. Yep, you heard me, $3,365.80 here at the moment for a 1 ounce a piece of gold. That is very, very significant. Silver, by the way, also hovering just below $33 an ounce at the moment. What do you see ahead for the precious metals here?
I mean, Frank, we've talked about this so often, and I've written about it in the book, that, we think so often people think of a high as being the high. I mean, you on your program have talked about gold at an all-time high for a year now, and it continues to make those all-time highs. That's because it's in the midst of a bull market. And as an investor, I think that's where you want to be focused. So even though gold get at another new all-time high, my expectation is I don't see, Joe Sixpack, if you will, putting it all in gold like they were putting it all in Bitcoin even 6 or 8 months ago. So I think the room in precious metals is to continue to run, not just in gold and silver, but again, I like platinum quite a bit, PPLT, and palladium as well, PALL. These are all exchange-traded funds. You don't have to get a safe deposit box and load up your safe with bars of metal. Buy these as ETFs. I think they're in bull markets, and I think they go higher from here.
On there live with Jonathan HOENIG. And speaking of Bitcoin, we see Bitcoin holding up pretty well today despite the sell-off among the tech names. Oftentimes we've seen a correlation between a drop in the NASDAQ and the cryptos here. But and as our listeners know, we talk to the biggest fans of crypto as well as the harshest critics. And I know you observe what's happening in the crypto space with Bitcoin right now, just above 84,000. At last check. What are your observations here on what's happening with Bitcoin and the other cryptos now?
Well, a lot of them have gotten really hurt. I mean, Ether, Frank, is one that I dabbled in for a while, down 52% year to date, 52%. And, this is the thing when you lose money in markets is that when you lose 52%, an asset has to return 100% to get back to so-called even. So I'm not seeing Bitcoin kind of lead the charge right now. And, Bitcoin has always been kind of compared as the digital gold. I would rather own gold right now, much more than Bitcoin. I think it's quite simply a stronger asset. So GLD, I think, would be a better buy for me than BTC.
All right, what about the volatility index, the VIX index, the so-called Wall Street Fear Index? We certainly keep an eye on that one. It spiked again today by about 10% here, moving up 9.5%. What are your thoughts about that volatility index, and do you make any use of it?
Well, you have to watch it, Frank. Man, as you said, we're hitting highs that have only been seen half a dozen times in the last 50 years. You know, the global financial crisis, the COVID epidemic, as you mentioned, some major bank failures. What's frustrating to me as an investor, and, you know, quoting from my friend Neil Cavuto from Fox Business, it's not red or blue, it's green. As an investor, I think you should be very frustrated because, you know, we're trying to plan long term. And as you said, how can a business invest building a multi-billion-dollar plant in the States if the next president is simply going to reverse President Trump's EOs? So, this tariff push has created so much uncertainty in the marketplace. I think it's a very difficult environment in which to put money to work. But I do think the big picture trend, and you know what, the Wall Street Journal summed it up: sell everything American. You know, sell U.S. bonds, sell us U.S. currency, and sell U.S. stocks, because the foreign versions are by and large outperforming right now.
Very interesting. And, of course, China, a big focus of the U.S.-China trade war at the moment, or the tariff situation here at the moment. Yesterday, China announced they would stop deliveries of all Boeing aircraft. Boeing stock took a hit yesterday. That's one that actually rebounded today, up nearly $1 at 156 and change. What about Boeing and other tariff-sensitive names out there?
Well, it's something that, Frank, as someone who grew up in the 70s and 80s and 90s, where all these tariffs were systematically cut, and we saw I think the real global achievement of global trade and trade among countries and citizens and all the wealth that came with it. It's disheartening to see these tariffs going up once again, and I'm very suspicious of if it's going to actually, achieve these goals of so-called bringing the jobs home. I'll tell you, the one I like more than Boeing is Northrop Grumman. We are, bubbling over with hot spots in this world these days, in the Middle East and in Europe and throughout Southeast Asia as well. So Northrop Grumman, I think, is the one to own over Boeing. NOC is the ticker. And, you always want to do your own due diligence, Frank, but put it on your screen as one to check out that could benefit from, unfortunately, some unrest in the world.
All right, and certainly a lot of these companies are sensitive to the dollar. What about your expectations for where the dollar goes from here? At last check, let's see, the dollar was pretty weak against the euro. At least that's what I'm hearing from folks that have been visiting Europe lately. 114 now to the euro here for the dollar. We're at 142 versus the yen and 132 versus the British pound sterling. Where are you placing your bets as far as the dollar is concerned?
The trend is lower for the dollar, Frank, and it's one of the reasons why gold is doing so well, one of the reasons why foreign stocks are outperforming U.S. stocks. And, for most investors, it seems like a very far-out idea. Trading the dollar is something that was done by, Michael Milken from his X-shaped Wall Street desk. But thanks to these ETFs, these are markets that every investor can participate in. And one that, your listeners might want to check out, and again, always do your own due diligence, but UDN, that's like U as umbrella, DN, like DN down. UDN goes up when the value of the dollar goes down. So this is an asset that's up almost 11% year to date for exactly as the reason you said, that the value of the dollar has gone down. This fund has gone up. And that's a way to play a falling dollar is with shares of UDN.
Very interesting. And we're watching the price of oil hovered around $60 a barrel these days, moving higher at the moment, up $1.28 at 62.61. Are you doing anything with the price of oil, and where are you placing your bets there? Well, I mean, if the economy really slows, and some of the major houses, Frank, now getting up to a 50% chance of recession. You remember during the pandemic, that slowed down. The oil actually went negative. So, I've been a fan of some of the master limited partnerships like AMLP. This is an ETF that holds a wide basket of these master limited partnerships. It boasts a big 6-7% dividend yield.
generally follows the price of some of these assets, but I am, like many, increasingly worried about the possibility of a real dramatic slowdown. So you could see oil go lower, and a lot of the oil stocks, Frank, they aren't necessarily outperforming, but AMLP is the way I'd play the oil patch right now. It's high dividend yield, and that can kind of give you something to chew on even if the market goes against you.
Bravo TV star Lala Kent holds nothing back.
There's been so many times where I'm like, I apologize that I said that, but that wasn't meant for you to hear.
Feel you there.
How fun would it be to bring in some Bravo celebrities and make our own bracket?
Iconic.
All right, I'll take Dorinda, you take Sonia.
Sonia is who I wish I could be.
You and me both. I cannot be someone in the program. What's PTO?
Pay time off. See?
Oh.
You've never had a real job.
Give them Lala.
It is nothing but honesty.
You guys know.
Follow and listen on your favorite platform.
On the air live with Jonathan HOENIG, Fox News contributor and portfolio manager at Capitalist Pig Hedge Fund, author, by the way, of the book Price is Primary, How to Profit with Any Asset in Any Market and Any Time. Any other specific places, Jonathan HOENIG, where you're putting money now and or taking it off the table?
Well, for a total off in left field, Frank, and I'm always looking for these ideas that are uncorrelated with the broad market. There's a new ETF. The ticker symbol is ILS. And it sounds a little out there, but it's an unconventional bond ETF. It invests in, get this, Frank, catastrophe bonds. So it's a bet that basically there's not going to be lots of storms in the Caribbean or lots of fires in, out west. And it opens up this whole esoteric area of catastrophe bond investing to everyday investors. So as always, do your own due diligence, but ILS is one that I own over at capitalspig.com, and I think it's a pretty exciting new innovation in terms of investment opportunity.
That is very, very interesting. And speaking of the bond market, by the way, we've seen volatility in the bond market, unusual volatility in the bond market, which it appears prompted the administration last week to impose that 90-day pause in some of the tariffs that they were planning. What about the bond market here? We see the yield in the 10-year note at 4.28%. That's the one that impacts the fixed rate mortgage rates out there. What do you see ahead for the bond market, and do you like the traditional 60-40 mix for the portfolios out there?
Well, that 30-year, Frank, when I look at a long-term chart of that 30-year bond, the long-term bond, boy, it sure looks like it wants 5%. We're below that now, 4.7, 4.8, and in fact, it touched 5%. That was supposedly one of the indicators that prompted President Trump to initiate that 90-day stay on his tariffs. So I am really worried about the possibility of continued inflation. Look, even with Doge, this current Trump administration is outspending the previous Biden administration. So the government largesse we really need to curtail inflation, that has not yet occurred. So the fact that gold keeps going up, the dollar is dropping, and a lot of the commodities are firming up, I mentioned platinum, is a worrisome sign to me that inflation could be going up and interest rates could be going up with it.
Very interesting, and looks like there's some, anecdotally at least, looks like there's a run on certain things once again, and I've seen some write-ups recently about chocolate and coffee. Looks like consumers can expect higher prices there too. Anything else on the commodity front that's catching your attention and something that investors and consumers should be preparing for at this point?
Yeah, I think you always want to build yourself a moat, Frank. And if most of our listeners if they just got their credit card debt paid down and had 3 to 6 months worth of living expenses in the bank, you'd be better off than I bet 85, 90% of Americans. And you know what? You'd have that clear head, able to make great investment decisions, able to think long term. If you knew you had that the credit card genie off your back. So try to use that. I think is a great goal. And I think have some dry powder now, or the old saying is when elephants dance, mice get trampled. So we're seeing some elephants dance these days. I think it would behoove most of us to let the dust settle. Let's see where the new leadership's going to be. My bet it's going to be those international stocks. They were leading before the Trump tariff sell-off, but let's let the dust settle and see where the new leadership is going to be.
Excellent point. We're seeing elephants dance and form circles to protect their young here in California, by the way. I don't know if you saw that video, but it's out there. Jonathan, thank you very, very much for joining us live here. Up days, big days, down days, big days, too. Jonathan HOENIG, Fox News contributor, also Fox News contributor, portfolio manager at Capitalist Pig Hedge Fund, business contributor on Fox News Channel, and author of the book Price is Primary, How to Profit with Any Asset in Any Market at Any Time. Jonathan HOENIG, thank you very much for joining us live here this afternoon.
Great to be with you, Frank. Thank you once again.
Thank you very much, and we wish you a great holiday week as well. And markets will be closed on Friday, by the way, for Good Friday and the Easter holiday / Passover weekend. Right now, we want to get out to the freeways here on 790 KABC. This year, May 2nd through May 26th. That's when the LA County Fair is back, and you're invited. Don't miss the LA County Fair concert series. Tickets on sale at lacountyfair.com. Right now, caller 9 wins at 1-888-790-5222. That's 1-888-790-5222. You can get a pair of tickets to the show to see Chris Young on Sunday, May 11th, if you're caller number 9. Call now, 1-888-790-5222. Tickets furnished by the Los Angeles County Fair. Rough day for the stock market on the latest comments from Fed Chairman Jerome Powell. What he said appeared to slam the markets today. The Dow coming in for a closing loss of 700 points, selling at 39,169. The S&P 500 down 121 at 5,276. And the NASDAQ down more than 500, down 516 at 16,307. The yield in the 10-year note is back. Let's take a look here at that. Is at 4.28%. We see the VIX index, the volatility index, spiking today up 9.5%. Dow ending lower by 779 today. The S&P 500, as it turns out, down 150, and the NASDAQ actually posted a loss steeper than I first mentioned, down nearly 700 points today. We see the price of oil higher now by 128 at 62.61, and gold saw a tremendous pop today, right now up 115 and change to 3,355.80. Yep, you heard me. Gold getting closer to $3,400 an ounce. All this based on what Fed Chairman Jerome Powell had to say in a conversation he had before an economics group in Chicago, expressing concerns about the tariffs and inflation, and the Fed apparently taking a hands-off approach at this point. Don't expect any more intervention from the Fed as it relates to the market moves, is what he implied in his comments. The movers today included the tech names on the downside with NVIDIA shares. Let's bring up the latest here. NVIDIA stock moving lower today by more than $7, down nearly $8 at 104.49. Let's bring up Apple, which has seen a wild ride lately. Apple shares pulling back nearly 8 at 194.27. And Tesla, which of course has seen a wild ride this year, down more than $12 today at 241.55. And now the latest news here in 790 KABC. Mottek On Money continues, 790 KABC. Good afternoon. Watching the auto company stocks react to the latest news. President Trump's dramatic tariff pause announced last week is not stopping Wall Street downgrades and price target cuts in the car business. According to Market Watch, the pause did not apply to vehicles. We see the stocks moving mostly lower today in the auto sector, with Tesla down more than 12 at 241 and change, Ford down 5 cents at 940, GM down 32 cents at 44.22, Lucid down 13 cents at 231, and Stellantis shares down 13 cents at 923. Even the computers are starting to freak out. Yes, the Dow did close lower by 700 points, off its worst level of the day. The S&P 500 down 121 at the close, and the NASDAQ closed down 516 today. Nervous time in the car business. Let's get an update now from Lauren Fix, editor-in-chief of Car Coach and the co-host of the Total Car Score podcast. She is live from New York tonight at the New York Auto Show. Lauren Fix, thank you very much for joining us live here this afternoon in Southern California.
Well, thank you. Yeah, there's a lot going on here. Auto shows aren't what they used to be. They're great for consumers. If you're thinking about which vehicle you're not sure, you can bring the whole family, sit in a bunch of different cars, get a couple business cards, and then make a decision. There are still good deals to be had out there, but there's a lot of new products coming. Some of the products that we saw that's brand new is from Kia. which also won the World Car of the Year awards with their Kia EV3, which is an electric smaller car. Really nice, actually. I drove it back in November. I was pretty impressed. But the EV4, which is pretty popular, they're now going to be bringing in the K4, which is the gas, which is brand new, but it's going to be available as a hatchback. So it looks like a little wagon. Really cool looking, fun colors, reasonably priced, lots more storage room. And these are kind of things that I'm seeing a real interesting mixture of more European-looking cars coming to the U.S., which could be good or bad depending on your taste. But Kia's got a lot of new products. I was just at the Milan Design Show, and they showed an EV2, which kind of looked like a Kia Soul that was all electric. So you're seeing some new products from that perspective. In addition, Hyundai showed us the 2026 Hyundai Palisade, which is a super seller for them. It's a 3-row SUV, but they updated it with a stronger design, a bigger motor, which has more performance and better fuel economy. And they also have an off-road light. I'm going to call it light off-road, to be honest with you. They call it an XRT Pro. That'll give you more hardware, including tow hooks and a towing capacity, and also things like heated third-row seats, things that you don't typically see in some of the, should we call them, non-luxury SUVs. So they've really stepped that up. Volkswagen brought out the 2026 Tiguan. So we're talking 26s. So that typically those don't show up in dealers till about August or September. And that's going to also have a performance model. So again, we used to talk all electric. Now we're talking an SEL R-Line turbo, which basically means more horsepower, about 70 more horsepower, 50 more pound-feet of torque. That's a lot. So it's going to make it a zippy little car for a small, compact SUV with some new exterior colors. More reasonably priced, the Subaru. They're coming out with a new Outback and an Outback Wilderness. Those were really, really nicely done, upgraded, which Subaru kind of needed that. But they have great all-wheel drive systems, very reliable vehicles. Stellantis brought us some cars from the 20s all the way up to current models. This is 125 years of the New York Auto Show. But in addition to that, they brought us out a new Jeep, and they talked about the new Dodge Charger Daytona. The Jeep is a Wagoneer, but it's called the Overland. And so it's really designed for off-roading because Jeeps, if you own one, you're going to take it out in the desert. You're going to take it up and down hills and go have fun with it. And the last thing that is from Genesis, they showed us a concept car, but they're going racing. Now, why is that important for the average person? If they're going racing, that means they're bringing their performance line called the Magma. So it's a Genesis Magma Racing. You're going to start seeing a lot of that. And just every day watching TV, you're going to start seeing some racing commercials from Genesis because they want to go head-to-head with the Germans, with Mercedes-Benz AMGs, BMW M, Audi RS. And so they're going to bring up head-to-head with the Germans performance line, and that's going to be real exciting. And 125 years ago, lots of unique cars. So they have lots of cars. If you're in the New York area, you're going to be in the New York area for the holidays, check it out. And April 17th tomorrow will be the 61st birthday of the Ford Mustang.
The Sean Ryan Show Peak Points. Get timeless inspiration from the very best of the Sean Ryan Show.
What do you think of working with the SEALs? We went out every night going after bad guys. I was humbled.
There was no going back home. I would be in another room crying because I was afraid to go to sleep because of what was coming for me in the middle of the night.
How long did it take you to be able to talk about it?
A long time. But I realized my experiences may help other people too.
The men like yourself are considered legends in the community.
You're right.
The Sean Ryan Show Peak Points. Follow and listen on your favorite platform.
Happy birthday, Ford Mustang. Wow, that's a big one. And we're out there live with Lauren Fix, editor-in-chief of Car Coach and the co-host of the Total Car Score podcast, coming to us live from the New York Auto Show. You mentioned some of the South Korean makes, Kia and others. And what about the tariff discussion there? How does it impact the South Korean makes as well as Japan and which is top of mind at the moment?
Well, I did talk to a couple executives last night and today, and it was an interesting conversation. I talked to Jose Munoz, who's the president of Hyundai Global. So that would be Hyundai, Kia, and Genesis. And I asked him, I said, what's your plan? And he said, well, what's interesting is we're putting $31 billion into the U.S. They're going to have a steel plant. In addition, that'll be in Louisiana. They're also going to expand their West Point, Georgia plant for the Kia line and the Birmingham, Alabama plant for Hyundai. So they're basically planning on building more cars here, bringing in more steel, more driveline components, which means more jobs. And they've already invested $31 billion, and they happen to announce it the day after the tariffs. So I don't know if it was planned in advance or the timing was just coincidental, but overall, that was a super smart move. Other brands, I did talk to Porsche because they were talking about potentially bringing in production into their their Tennessee plant, which is Chattanooga, and they don't think that they're going to be bringing Porsche in because that space will be used for Audi and Volkswagen. So I don't think you'll see. I think Porsche's just going to raise their prices by 7%. Ferrari's going to raise their prices by 10%. And listen, people that are buying those cars, I don't think it's going to impact someone making a decision.
Interesting. The latest headlines from Reuters: South Korea and Vietnam pledging cooperation as U.S. tariffs loom, and the U.S. And Japan also trying to work something out related to tariffs. You mentioned a word that was anathema there for a while in the car business, wagon. For a while there, nobody wanted anything it's called a station wagon, but you mentioned the word wagon there. Are station wagons coming back?
Yeah, they are. Actually, Mercedes-Benz is offering what they call a shooting brake, which is basically a station wagon. That's just an old term, or a hatchback. Along with Kia, that's becoming a trend. It's becoming a European trend, and it'll eventually make its way over here. SUVs are not that popular in Europe, but they're more popular here. I think people are just looking for something different because I think when we were kids, we didn't want to drive a minivan because our mom and dad drove a minivan, so we looked at SUVs. And now we're like, no, mom and dad drove an SUV. Now I need something different. So looks like hatchbacks are starting to make a trend back, and that'll be good. It's good to have a mixture of vehicles, and of course, sedans are still popular, even though the domestics don't make them. So Ford doesn't really have one other than the Mustang, and General Motors doesn't have one other than the Corvette.
Fantastic, Lauren. Well, have fun in the Big Apple and look forward to your updates, and we'll be looking for you on your podcast and on YouTube. That is Lauren Fix, Editor-in-Chief of Car Coach and the co-host of the Total Car Score podcast, live coming to us tonight from the New York Auto Show. We look forward to the L.A. Auto Show and have you back here later this year. Lauren Fix, thank you very much for taking the call live with us here this afternoon.
Thank you.
Out to the freeways now, 790 KBC. Mottek On Money continues here in 790 KBC. As we heard directly from the Fed chairman today, elevated uncertainty these days for businesses, especially small business. Tariff situation starting to get on people's nerves, especially small business people. We've seen a number of write-ups recently that President Trump's tariffs socking U.S. businesses across the board, but the smaller companies are really taking it on the chin, according to recent reports. Let's focus on small business now, standing tall for small, as we do here all the time on the Mottek On Money program here in 790 KBC. So is JOSSELIN Castillo, Principal of Federal Government Relations at the National Federation for Independent Business, which happens to be the voice for small business in the United States. JOSSELIN, thank you very much for taking the call here this afternoon.
Thank you. It's a pleasure to join you and your listeners this evening.
Wonderful to have you with us here, and must be a busy time for you. And give us your reaction to this latest tariff back and forth, the pause for 90 days for some tariffs, and how small business people are holding up in all this.
No doubt. I mean, look, small business owners have basically been dealing with a very turbulent environment economically for a couple of years now since COVID. And so any new policy changes, especially things that create uncertainty, are things that NFIB is monitoring very, very closely. That being said, tariffs impact every industry very differently, and NFIB represents a broad spectrum of businesses from all types of industries. And so we're taking a very close look at what exactly will be implemented, how will it be impacting our members, and honestly getting feedback from our members. The most beautiful thing about NFIB is everyone gets a vote, everyone gets a say, so we're taking that feedback in, and we'll be taking positions based on what our members tell us they need.
All right, hopefully everybody made it through April 15th. We were talking on April 16th now, a day after Tax Day, with taxes very much in focus, certainly, and in hopes for an extension of President Trump's tax cuts, which were put into place during his first administration. What's the latest on the tax front as far as small businesses are concerned?
That's right. And I mean, we're talking about uncertainty. Unless Congress acts this year, and I mean soon, there's a 20% small business deduction that will disappear at the end of this year. That means that 9 out of 10 small businesses, more than 30 million, will see their taxes go up. So that is a huge priority for us here at NFIB. And Congress, thankfully, was able to kickstart that process last week before they left D.C. by passing a budget that sets us up for the next stage of this tax fight, where we hope to see that tax deduction made permanent. And look, a new NFIB survey shows that over 60% of voters, a majority, support making this tax deduction permanent.
Yeah. So where do things stand here? And tell us about the work of the National Federation for Independent Business to lobby Congress. Looks like the president is behind this, right? What's being done to push this forward, and when will we get a final decision on that?
Well, so it's a big conversation as far as, the other tax provisions, how to pay for it. We have very high deficits. And so there's obviously a lot that has to happen in the next few months. But the sooner that we get this done, the better, because as you know, certainty is what allows businesses to invest, to decide to grow, to hire, to buy that next shop, to buy that equipment. And so we're all hands on deck here at NFIB trying to elevate the voices of small businesses themselves. We're flying them to D.C. We have events back in the district. We're talking to lawmakers about the benefits of the tax breaks and what would happen if it were to expire. And frankly, we're driving a sense of urgency because DC likes to wait till the very last minute. And when it comes to business certainty, especially for the U.S. foundation economy, which is small business owners, we really cannot wait. So we're driving urgency. We do have a pretty friendly administration on this issue, and we're just hoping that they can get it done here in the next few weeks.
On the air live with one of the top people at the National Federation for Independent Business. We also had the president of NFIB here on this program. I know he's also doing what he can to make Washington more small business friendly as Congress debates tax policy. And it looks like small businesses are behind your efforts. Any way to directly connect with you and to make the voices heard there of small business in Washington on this very, very important issue?
Absolutely. Small business owners are taking action and making their voices heard. But guess what? Most Americans actually want to ensure that their communities and their small businesses are doing okay at the end of the day. So you can visit www.nfib.com/Stop Small Biz Tax Hike. That is small biz with a Z. And you can learn more, take action, join our effort to ensure that we have certainty and that our communities can thrive once more.
Terrific, Josselin. Well, thank you very much. We'll keep an open line to you on this very big story as we stand tall for small, as we say here on Mottek On Money on 790 KBC. That is Josselin Castillo, Principal of Federal Government Relations at the NFIB, coming to us from Washington. Thank you very much for taking the call live this afternoon.
Thank you. My pleasure.
Recapping the day on Wall Street, another seesaw session, and mostly on the downside, with the markets reacting to comments from Fed Chairman Jerome Powell. Looks like he says tariffs could impact inflation and the economy, and looks like the Fed is in no hurry to step in all this. We see the Dow closing down 700, the S&P 500 down 121, and the NASDAQ down 516. Stay tuned now for the 790 KBC News Blitz with Randy Wang. I'll be back with more at 4 tomorrow afternoon right here on Mottek On Money, 790 KBC.
It's part sports.
We have football on the brain.
Part pop culture.
Dennis Leary. True or false? You refuse to wear a glove with Mickey Mantle's signature on it for the movie The Sandlot.
The Red Sox blood, the Bruins blood, they run deep.
And in the best celebrity interviews.
Robert De Niro here on The Rich Eisen Show. How are you, sir?
Just got over a 24-hour virus.
The antidote is to appear on The Rich Eisen Show.
There you go. I would have just done it earlier.
And you've got The Rich Eisen Show podcast.
There is a medicinal quality to appearing on this program.
Follow and listen on your favorite platform.